Webinar, courtesy of Baptists Together. This webinar is going to be talking about church reserves and reserves policies. My name is Richard Wilson. I am the Support Services Team Leader here at Baptists Together, based out of Baptist House in Didcot, and I'm joined today by our Finance Manager Ian Wakeham, who's here with me, and hopefully you can see both of us on the video, and you can hear us, and you can see the slides as well. If you do have any technical issues during the webinar, you should find that there is a support link at the top of the web page, so please do click on that to request any support from the webinar system. We're going to be presenting some slides today. The webinar should run for about 30 to 40 minutes. There is an opportunity for you to ask questions. So there's a Q&A tab running that you should find either to the right or below the video on your webinar page. Please do type in any questions there. Please try to keep any personal details out of that, because we won't be able to address personal situations, but please do ask questions as they relate to your church or your organisation, and we'll do our best to answer those either as we go along, or we'll save up any significant questions to the end. So without any further ado, I'm going to hand over to Ian, and he's going to lead us through the first part of our presentation. So Ian, over to you.
Thank you and welcome. Now we're going to go back to basics a little bit and start with the charity SORP. SORP refers to the Standard of Recommended Practice, which came into being in 2005 and designates the funds that are needed for charities to operate. Not all charities will actually have all of these funds, but these are the funds that we actually need. There's the unrestricted funds, sometimes called or referred to as the general fund. There are designated funds, there are restricted funds, and there are endowment funds. As I say, not all charities will have all of those. You will certainly have unrestricted, but you might have some or all of the others. So what is unrestricted funds? Well, funds are generally used for the promotion of the church's charitable purposes or objects for the public benefits, and in whatever way that they seem to fit with that in relation to their objects. You've got designated funds. These are funds which are designated, set aside monies from the charity for a particular project or activity. This might be, for example, building projects, something to do with the kitchen or some development or mission activity that you want to set aside some money for that purpose. So it's coming out of unrestricted. So these funds, as I say, are set aside for a particular project or activity. They can always be referred back and undesignated and be taken back into unrestricted. And then you've got restricted funds.
I think the important point about designated funds is that they're legally unrestricted, but the church at its discretion is taking the choice to set them aside and can remove that choice at a later date.
At any time, yes.
So hence designated.
So it's an extension of the unrestricted, but it is setting aside a fund for that purpose.
Exactly. Yeah.
Restricted funds are funds that are held for donor-specific purposes. These are where a donor has specified how the money is to be spent and cannot be spent in any other way. So this might very well be if you're doing a building project and you're starting to collect money for that, and money is being given for that particular purpose, then it's got to go into the restricted funds. It cannot be going into the unrestricted or the designated. And any funds that have been collected and you've accumulated and haven't spent need to then be sent back to the donor, or with their permission, can be taken into unrestricted, but with the permission of the donor. Or if there is a balance of less than £10,000, the charity commissioners will allow you sometimes to take that back into unrestricted. But predominantly it is restricted funds for that purpose. So they are appeals for the church, and they have a specific purpose to be used. Then, of course, there's the endowment funds. These are legacies, if you like. These are held on trust, whereby the capital is retained and the interest generated from these endowment funds can be used. Sometimes the income that's generated can be used for a particular purpose, or it can be unrestricted and go into your unrestricted funds, and that will be based on the endowments that you actually receive. But you must keep hold of the capital, that cannot be spent. And obviously any changes in valuation of those endowments must also be kept within the fund. They cannot just be taken out into unrestricted. So those are the 4 different types of funds that we've got. And then we're starting to look at free reserves. Free reserves are, according to the Charity Commissioners on their leaflet CC19, is described as a part of the charity's unrestricted funds that is freely available to spend on any of the charity's purposes. Now that excludes endowment funds, it excludes restricted funds. It also excludes assets that are not easily turnable into cash, so buildings or the manse or the church itself, maybe computers. So anything that cannot be readily turned into cash are excluded. And then you've got funds that are already committed for a future expenditure. Then generally you would exclude those from the calculation of the free reserves.
Which, for example, might include money designated for a particular purpose.
It could be, yes.
So,
yes.
So sometimes that would be a designated fund, sometimes not.
Yes. So what can be included then? It can include listed investments, which can be easily sold and transferred back into cash. And also the designated funds, as we've seen earlier, can be undesignated and turned back into unrestricted. So there is a little bit of movement here in calculation of the free reserves as to how much you want to set aside in the designation of the funds, whether they get counted as part of the free reserves or not. So let's have a look at a flow diagram as to how you calculate free reserves, which is what we need for the year end. You start off with the total funds, then you take off your endowment funds, then you take off your restricted funds, and that then leaves you with your unrestricted and designated funds. From that you can look at funds that are not readily turnable into cash and funds that are committed to future spending, like the designated funds. So you take those 2 funds off, and that will give you your free reserves. That's how you would actually calculate the free reserves. So let's put some numbers on that. Here is a simple balance sheet of property investments. You've got a little bit of debtors, that might be gift aids that you're waiting from HMRC. You've got cash in the bank, you've got some liabilities, and then you've got the various funds. To do the calculation, we take the total funds of 1285, which is the bottom of the total funds and the total reserves, take off your endowment and restricted, the 335, that's the 50 and the 285 together. You can take off the designated because that's been designated and you want to take that out. You can't easily turn the building into ready cash, so we can take the property out. So in this example, you'd end up with a free reserves of £50,000. However, it could be decided by the leadership team, by the trustees, that actually you only want to set aside 5,000 for the designation. So even though the designated funds are 25, within the calculation, you might decide that you only want to take off 5, which will then change the free reserve. So as I say, there is a little bit of movement here as to how you do the calculation. So let's go on to some of the practicalities.
Yes, so when thinking about your reserves and the reserves policy that you have, it's important actually to think about, in a sense, your financial position, your financial strategy as an organisation, and thinking about where does your money come from and where does it go. So, for example, are you reliant on a lot of donor income? Now, for most churches, that would definitely be a yes. Some churches, have for example, a lot of property income that might fund a lot of their operations, but for most churches, they're reliant on the giving of their members to support their ongoing operations. So that gives you particular features in terms of how you might need to handle your reserves. Less so probably for churches, but some organisations rely on a lot of legacy income. Now, legacy income tends to come in very large lumps and can be quite erratic. So that provides certain challenges in terms if you rely on legacy income. We talked about income from property letting, so you might be letting rooms to various external organisations who pay your church for use of buildings. It may be that you've got a manse that's let out, for example. If you're between ministers, that's quite a common source of income that churches will use in a pastoral vacancy. Are you using investments to generate income? Now, some churches, so for example, if you have in the past received a very large sum of money and you haven't got an immediate need to spend it, you might for example put that money into investments to generate income, either maybe a property investment, maybe some stock market investments, or other sorts of investments. There are lots we're not going to go into investments on today's webinar in detail, but just looking at where does the income, what is your church reliant on? You've then got questions about expenditure. Have you got any major expenditure coming up that you have money you wish to be prepared for that expenditure? And that, again, you might well set aside, designate some funds to cover those expected costs. And there's a whole question which relates back to some of the things we've already talked about there. How reliable, how predictable are your income and your expenditure? Some income can be quite erratic depending on your situation. If you've got donors who give on a occasional basis, then that can be quite unreliable. If the vast majority of your income is on, say, standing orders from individual members, then that's likely to be quite reliable and come in, month out. Expenditure, I guess, in a lot of churches, it depends very much on the profile of your cost base. If you have staff, then that cost will generally go out relatively smoothly each month. If you're renting a property, if you're paying gas and electric bills, then they tend to be fairly easy to predict. But sometimes you might have very large unpredicted expenditures. So if you've got an old building that's a bit difficult to maintain, you may have some large bills that come in irregularly. So all of these things are important when bearing in mind your reserves position, i.e. how much money do you need to keep aside. So when coming to setting that reserves policy, what is the appropriate level of free reserves for the charity to hold? Your church is a charity, so therefore you need to consider the requirement of the Charity Commission to set a reserves policy. Danger of having too little is that you can't cope with any unexpected issues without the whole charity being able to meet its commitments, and that's not a good place to be. So you may get this example's getting a little bit dated now, but you may remember the collapse of Kids Company a few years ago, where essentially they held little or no reserves, and as soon as they hit any trouble, the whole charity imploded, and that was not a good thing for their beneficiaries. And in a similar basis, it's important that as churches we consider what would go wrong, what would happen if something went a bit wrong. If we did have a big bill for a repair to a building or some other issue that needed to be resolved, what would we do? How would we cope? But there is also danger of having too much. Now, this is potentially something we do see in churches from time to time, is where a long-standing church has accumulated assets over time. And I'm not sure it's always I'm certain it's not a good idea to hoard wealth for its own sake. We're here to serve the kingdom, and so it's important to actually deploy the assets that we have to serve our charitable purposes, to serve and grow the kingdom of God. So it's really important that we don't say, actually, we'll just, whatever we've got, we'll just keep it and keep it and keep it. We need to think about, actually, how are we going to deploy those resources to the benefit of the kingdom, to the aims of our charity. So the Charity Commission has some guidance. So Ian's already mentioned leaflet CC19. So Charity Commission publishes these series of guidance leaflets, the CC series. CC19 is the one that particularly focuses on charity reserves. So CC19 requires that all charities, and that includes churches, state the amount of reserves after the charity holds at the end of the reporting period after making allowance for any restricted funds, and the amount of designations, commitments, as any that aren't provided as a liability in the account, or the carrying amount of functional assets which the charity considers represent a commitment of the reserves they hold. Now, that might be, for example, you've committed to support a missionary abroad and you've committed to them for 3 years, and so you want to make sure that you've got that money, because clearly you don't want to be disrupting them by reducing that at a later date. It is important to note here, however, though, that the requirement is only to make an allowance. It doesn't necessarily mean take the total value and deduct it. I think for restricted funds and endowment funds, you generally would, because you're not legally allowed to deploy those funds for any purpose you choose. But on designations, you may say, well, actually, in emergencies, we could raid that money. So that's the point that you need to be thinking about, is what would be in our worst case scenario, where we were running short of funds, where we were running short of free reserves, what could we make use of? So, for example, I know in my own church, we have a fabric fund set aside as a designated fund that's there to cope with major repairs. Now, if we had a major expenditure that wasn't a repair, could we use that fund? You know, if for example, we had an employment issue and needed to pay a sum of money as a settlement or something like that, could we raise that money? Of course. So in our own church's reserves policy, we do count that within our free reserves. So, and that can be quite a substantial sum of money. So in our church's case, we've got about 20,000 set aside in our fabric fund, but we do count that within our free reserves, even though it is in a designated fund. So moving on, designated funds, just to talk a bit more about this, the trustees may choose to exclude designated funds from the calculation of the charity reserve, or they may not. And as I've just said, in our own church, in my own church's case, there is at least one of our designated funds that we do choose to include in the calculation of the charity's free reserves, and that's a choice of your trustees. Now, to go back to the example I gave a moment ago, if you're supporting a missionary abroad, for example, and you've given a commitment to give them 3 years support and you're at the end of year 1, you might well say, well, actually, we want to keep the other 2 years in a designated fund, and we don't want to be including that in our free reserves because we have effectively made that commitment. It may not be a legal commitment, it may not be an accounting commitment that counts as a liability of the church yet, but you want to keep that money set aside because you're saying, in emergencies, we wouldn't raid that money because we wouldn't want to leave that missionary unfunded in their last 2 years. So that's the sort of thing that you might that's the sort of choice that you've got to make, and it's entirely down to the discretion of your trustees, whoever is leading your church. I've maybe used the term trustee there without explaining it. So the trustees in your church will be those who are managing the church day to day. Will often be a leadership team, a diaconate, perhaps elders, but the group that meet regularly to make the day-to-day decisions for the church. So those are your trustees. We won't go into the full gory detail of that. If you have further questions on that, do get in touch. But yes, so the trustees under the charity law are those who make these key decisions, but you need to make those decisions about what is important for you to set aside and keep out of your general free reserves, and what is we've intended to set this money aside. You know, it is put aside for a purpose, but actually in emergencies we would raid it and we would take it back, at which point it's perfectly reasonable to count.
So both the documents, the charity commissioners, yep, and the SORP, both are giving the indication that we can actually make those choices. We're not bound in stone in how we operate.
Absolutely, and it's particularly around designated funds, because designated funds are funds over which the charity has discretion. Legally, endowment funds and restricted funds are constrained for particular purposes. They have legal restrictions on them that mean that they cannot just be expended for any purpose. but designated and unrestricted funds are essentially within the discretion of the trustees to spend as they see fit within the framework of the overall charity's objectives. So, how much do we need to keep? Well, a church may decide, so here's an example of a relatively straightforward policy, may decide to hold 3 to 6 months budgeted expenditure. Now, let me just make a note, an observation on here. So 3 to 6 months is actually a range. So the reserves target that you're aiming for may well be a range that within these bounds is where we feel comfortable. More than 6 months would be too much, is what this policy is saying. Less than 3 months would be too little. Less than 3 months means, well, actually, if we did have a major hiccup, that wouldn't, the 3 months might not be enough cost cover to allow us to keep going through that hiccup. And so over 6 months, at that point, that's what the trustees would have decided to say, that that's too much, and we're in danger of hoarding too much at that point in time. It's possible, I'm not sure it would be wise necessarily, but it's possible a church may choose to hold no reserves at all. Now, that's quite dangerous. That means that any hiccup in expenditure, you would need to immediately find something to cover it. But there are charities that do hold no, for whom that would be a legitimate policy.
So if your investment income is substantial and covering your normal expenditure, and you're just building up funds for some process, then you might decide not to actually hold any reserves at all because of that income, which is guaranteed. Yeah,
no, indeed. If you've got a guaranteed income, or perhaps certain charities where they have no expenditure commitments. So, for example, if you were running, say, a parent-teacher association at a school, and I'm a treasurer of one of those, actually, as it happens, and all you're doing is passing money to the school, you might say, actually, we don't need to hold any reserves, but we do our fundraising and then we pass the money across. And that is a legitimate policy. Probably not in many cases, because you might want to have some funds available to finance the next fundraising event, but there are certain charities for whom it is legitimate to hold no free reserves. But if you do that, you will have to be able to explain and be able to account for why that's a good idea. In fact, there is specific guidance in the SORP that says that you have to, if you choose to adopt a zero reserves policy, then you would need to explain why you feel that is appropriate. I would generally contend it's unlikely to be appropriate for a church, certainly one that has employment commitments or commitments to a minister or any member of staff. Or indeed, to be honest, commitment to almost any expenditure. So what happens if the gas bill comes in a bit higher than you expected? You would need to have ability to cover that. But the trustees need to, we've just talked about a couple of very simple examples there, but the trustees would need to base their reserves policy on the risks and the charities and its beneficiaries might face and how it chooses to manage them. If your income is very erratic, then the likelihood is you will need to have more reserves to cover a trough in income. So if you're reliant on legacies, then you will need to hold enough reserves to cover you through to the next legacy. If you're reliant only on, most of your income is by monthly standing order, or maybe you need to have enough reserves to cope with your biggest standing order being cancelled. If, say, a member dies or moves away or unfortunately falls out with you or leaves the church or what have you, that's the sort of thing you might need to cover. Or if you had an unexpected, the sort of reasonably foreseeable unexpected expenditure. So, Ian, I think I'm handing back to you now to talk about some of the specifics.
So let's bring that back into context a little bit and summarise some of the things we've actually said. So why might we need to keep reserves for the charity for it to be effective? Well, the church, as Rich has indicated, might have unforeseen emergency or other unexpected need for a fund, whether it's the breaking down of a boiler or something happening, a major repair within the church. You need to have some money for that. They're covering the unforeseen day-to-day operations, so not necessarily an emergency, but something actually happens which is budgeted for later in the year, and it happens early in the year. We need to actually operate and continue to continue So we need to have some funds there. We've also indicated about the loss of income if a major donor, a major church donor, decides to stop, move away, or they die, and therefore you don't get that income coming through anymore. Or if a group who are hiring your hall on a weekly basis, if they start to cease, that can actually cause a sudden loss of income, which you weren't expecting. So you need to be able to cover those sort of eventualities. But also the planned commitments that you have, or the designations that cannot be met by future income alone. You need to make sure that you've actually got sufficient money in the bank to be able to make those commitments. And of course, if there's a need to fund short-term deficiencies in any cash balances, again, the reason why we need to have reserves. So having discovered and worked on why we need to keep the reserves, how much do we need? Well, we need to cope with the unexpected expenditure, so we need to have money there. There's the cash to allow time for funds to be adapted. In case there's events, particularly in the loss of income, you may need to have time to find new sources of income. So you need to tide yourself over for that eventuality. So again, you need to hold some money back.
Or you might need to make a redundancy payment to allow you
that you weren't expecting to make. Yes.
To allow you to cut a staff cost if you had to. So
yes. Of course, if there's variations in any income and expenditure, we work very hard in trying to formulate budgets, and sometimes those can go out awry, but totally over the year that might be appropriate, but sometimes the timing may be slightly at variance to the budget. So we need to be able to cope with those cash variations.
And there's an extent to which it depends on the seasonality of your income. Certainly in some organisations, and we here at Baptist Together, we have quite a spike in our income towards the end of the year. So we need to be able to cope with the low point on income because our expenditure goes out fairly steadily through the year. And actually, so we around about the autumn will have a peak in our deficit cumulative for the year, and we need to be able to cover that, and then a lot of money tends to come back in the last quarter, so we make a surplus in that quarter, and we need to be able to have sufficient reserves to cope with that fluctuation through the year. And you may find in your church, depending on the profile of your donors, that may be something you need to think about as well. So you need to have that general day-to-day working capital just to cope with the ups and downs of the various months during the year. It may be your insurance goes out in one lump in the year. You need to be able to cover that when it comes around. So.
Yes, of course. Of course, there's lots of pressures outside of the charity which will affect us. So if the interest rate changes and it goes down, for example, as we might be expecting in the coming months, that might actually affect the interest and the income that we might get from our investments. And therefore we need enough, again, to have enough money to be able to cope with that slight change.
Yeah.
But don't take that all as possibles and therefore start to add them up as a kind of disaster scenario. We need to be pragmatic about it. We need to be looking at the probability of these things happening and taking a view, not just adding them all up and saying, this is the amount of money that we need to hold back in reserves. We need to have an understanding as to the probability and the effect and the likelihood of some of these actually happening.
Yeah, and I think it's important there to understand that you will have other mechanisms in place to cope with an unexpected cost. So, for example, if there was a fire in your building, you probably have insurance, so that would be an insurance issue to deal with, and you wouldn't necessarily need to hold reserves. You might need to hold reserves to cover the excess on the policy, but that doesn't mean that
the loss of income if you're renting out.
Yeah. But again, the loss of rental income would usually be covered by your insurance policy. So therefore, you have got insurance to cover those sorts of things. What you need to think about is how would we cope in a short period while waiting for an insurance claim to come in, or equally, if say for example you uncovered that the roof needed repair. Now that wouldn't usually be covered by insurance, but you might well have time to do some emergency repairs and then do some fundraising specifically to cover the major cost. So holding back and saying, well, actually, we need to have enough money to rebuild the entire church would not be appropriate, and that would be unhelpful to say, well, we have to hold, our church, we've got £3 million rebuild, so we'll hold £3 million in reserves as our target. Well, that's not a good idea. So you really need to think very carefully about what is the appropriate balance and the level of risk that you're prepared to live with.
So we looked at the why, we've looked at the how. So have we got sufficient funds at the end of the year? Because at the end of the day, when we publish our year-end accounts, we have to produce a report to show what our reserves policy is and how the accounts are in relation to that reserves policy. So we need to be comparing with what we might need with what we actually hold. And that means calculating the amount of reserves that you need. Again, taking that pragmatic view and not taking a total disaster recovery scenario. We need to state the amount of reserves held and compare that with the target amount or the range set for reserves. It's probably generally best to have a range rather than a fixed amount that we say that we will have as reserves. Explain any shortfall or excess in the reserves against that set target, that set range, and to explain any action being undertaken in case the actuals are significantly less or more than the reserves policy. So if you've got too few, well, how are you going to try and bridge that gap? How are you going to build up those reserves again? But if you've got too much, well, how are you going to then adjust the balance? So let's look at some examples, very simple examples of a reserve policy that we would have, and then how that will be reflected in our year-end account. So here is Anytown Baptist Church, and their reserves policy is to hold 3 months of all budgeted expenditure, plus a further 3 months of staff costs, because obviously that's a large proportion of most churches' expenditure, to allow that church to adapt to any changes in income or expenditure of the church. Now that will be the reserves policy, and then how that will be reflected in the annual report, because you start to look at some of the figures. The reserves policy of Anytown Baptist Church is to hold 3 months of all expenditure, plus a further 3 months staff costs to allow the church to adapt to changes in income or expenditure of the church. That's basically what's stating above. And then you do that analysis. The trustees currently believe there is to be about 23,000 compared to £12,000 in free cash reserves held at the year end. Now, the trustees have budgeted to run a surplus in the coming year to start to build up reserves to meet the policy. The policy is to be reviewed annually, and therefore there's an indication here as to how you're going to then bring those actual cash reserves into the general policy that you're setting.
Now, the interesting observation here is it's important here that the reserves policy is not being met. Yes. So that this is not a moment which everybody runs around panicking, in pure don't panic Mr. Mannering style. This is not a crisis, but it is a trigger here that says actually things aren't how they should be. We are aiming to have more reserves, and so the trustees need to demonstrate in their report that they are taking action. And so here they've made a clear statement that says they're running a budget. They're planning to run a budget surplus, i.e., keep their costs below their income, such that they can build up. And it might be over a course of quite a number of years. It might be they're running a £1,000 surplus, and it's going to take them 11 years to get back to the reserves policy. But the important point here is action is being taken to address the issue.
On the reverse side, you might actually have more reserves than your policy. So let's look at another example. So Othertown Baptist Church is to hold 6 months of expenditure, very similar to the first example, plus a further £10,000 for emergency building repairs. So a slightly different scenario here, but basically the same. And when they've looked at their year-end figures, and it's decided that the trustees believe that they should be holding £45,000, but actually what they've got in their cash reserves is £60,000, way above the £45,000 at the end of the year. So having identified that, is then the trustees are looking at ways in which they can start to use that surplus and bring that £60,000 worth of cash reserves back towards the level that they wanted of around 45. So they're not wanting, they've identified that they've got more reserves than they need, but they want to take it back so they're not hoarding money, or to be seen to be hoarding money, when actually they could be using that money for the God's kingdom.
And there could be all sorts of explanations So it could be, for example, in this instance, that they're saying actually they would just say, well, we're going to designate £15,000 to a particular project. So there are lots of options you can take in these scenarios. Particularly, obviously, it's easier if you're above your reserves policy than it is to come from below. But when you're above, then obviously it is a prompt to the trustees to say, actually, well, maybe you've got too much money in hand and you need to be doing something about that, because you're not deploying your assets immediately for the work, the objectives of your church, for the service of the kingdom. So please, so this is a control policy really that helps you to identify if you're using your resources wisely and appropriately.
So to sum up, what needs to be reported at the year end under FRS 102. FRS is the Financial Reporting Standards 102, which came into force in 2015. The reserves policy, and it needs to be in words. Now, you can have pretty little pictures in your annual report, but the reserves policy does need to be in words, and you need to be stating what that means in cash value terms. You also need to calculate the actual free reserves at the end of the year and compare it with that reserves policy to see if you're under or over, and explaining what steps you're taking to bridge the difference, if there is one.
Yep.
And there is that variance explaining what we're doing. So we've got various resources online.
Oops, sorry. I'm incompetently operating the PowerPoint there for a second. Right, just so here's our resources. Right.
So if you want to know more about some of the things that we've been talking about today, if you go on to the Bugby Baptist Together website and search for F07, that's the form that we have for charity reserves. You can find that very easily, as well as lots of other resources covering all sorts of financial and legal and ministerial matters and taxation. But F07 is the one specifically for charity reserves. But you may also want to look at notes from the Charity Commissioners. We refer to their leaflets, CC19 on charity reserves itself, CC12, which talks about planning and managing difficulties. And we've also got CC26, which is a charity at risk management, which they've put together. And
it's essentially important to think that your reserves policy is essentially the financial side of your risk management within your charity, which is hence why these two other leaflets from the Charity Commission are very relevant, is because your reserves are essentially about your money set aside to handle difficulties or to handle risks coming to pass. So hence why we would link these topics together. So the reserves are very much the financial side of your risk management policy. So that's all the slides that we had for today. We thank you for bearing with us. Perhaps not one of the most exciting topics that we ever cover, but we felt this was an important one to help churches with.
Well, particularly now at this time of the year, when we're coming up to the end of the year, and we are starting to look at reserves and what we're doing for the end of the year statements.
Indeed, and it's very important to think that reserves are very much part of your integrated financial management of your church, both in terms of how it links to your risk management, so thinking about the risks that your church is facing, and how you're financially set up to cope with anything unforeseen, and also secondly about your overall financial sort of strategy and planning. As are you planning for growth? Are you planning for coping with a different trajectory? Maybe you're foreseeing decline, and you need to make sure that your reserves are in place to cope with that. So that's how it fits all together. I'm going to look across. We've got in the room with us Hazel, who's been looking at the Q&A. I don't know if we got any questions come through for us, Hazel.
We have. The first one is: should your reserves policy be based on the budget for the current/new year, or expenditure on the year just ended?
Generally, I would say reserves policy should be forward-looking. So you should very much be looking. The whole point of a reserves policy is it's looking to the future, as in how much money do we need to cope with the future. So I would always start from the point of view of thinking about reserves policy for the year ahead. So if you think you're going to, what you spent last year is kind of irrelevant to what reserves you might need going forward. So I would generally look at future budget. If you want to be more sophisticated, if you had a longer term plan, I would say that's unusual among churches. But if you had a longer term plan, you might want to set it in reference to that. So many businesses will operate a 3-year plan or a 5-year plan and will set their reserves policy with reference to that. But yeah, certainly I would try to do it forward looking rather than backward looking.
Next question is, if a church has been bequested a house in a member's will, should the sale proceeds be unrestricted?
It depends.
Depends on the endowment itself.
Depends on the terms of the will, and you would need to ask the person administering the will, the executor, as to what conditions, if any, were attached to that legacy. If purely it was just, here is a legacy to your church, then by default it's unrestricted. So, but if there are conditions attached as part of the legacy, then you would need to get legal advice as to how to best satisfy those. If you're unsure, then please do feel free to contact us at Baptist House. The legal team here may well be able to help if it's relatively simple, but there may be times where you need specific advice on that. But
and of course, it could be either or. It could be that the donor, the deceased person, wanted a certain amount of funds going into a particular project, and the rest could be undesignated. So it will depend on the terms of the will itself.
So sometimes you will get a will where it says it's for the church, and I would like to express a wish that it's used in the following way, at which point that expression of wish is not binding, and you may often be able to, it's then really within the discretion of the trustees as to whether they wish to follow that. But yes, it depends so much on the wording of the will.
But also it could be the inheritors of some of the other will, that a daughter or son might come to your church and say, well, I would like it to be used in this particular way. This is what, my mum or my dad has spent a lot of time with the church. Can we do it in this way? Again, that will be up to the discretion of the trustees of the church itself, and that's not binding.
Yes, what's binding is what's written
in the will
itself. In the will as a specific requirement. If it's only an expression of wish, then you have discretion. So, Hazel.
Okay, our reserves policy is written in terms of a minimum reserve. Previous treasurer set forward budgets to reduce the reserve back to a minimum. I'm not sure this is correct. Should we have something in the policy about maximum reserve as well as a minimum reserve?
So you would generally say you want, I think what's been described there is having a policy that says we should hold reserves of at least this, but no maximum specified. By implication, it suggests that, I think the question suggests that they were trying to get back down towards the minimum. Now that implies that effectively the minimum was the target. I think having a range and having a minimum and maximum is quite a good practice, because clearly landing on exactly one number is A, impossible, and B, you would spend all your time arguing over exactly what the right number was. But having perhaps a range, as one of those examples we gave talked about, as 3 to 6 months expenditure. So if you're within that range, no problem. Above the range, aiming to get back down. Below the range, trying to get back up. So I think yes, there's a lot of discretion in terms of how you set a reserves policy. You can have a precise number you're shooting for, but as I say, a minimum maximum range is probably a reasonably good way of operating.
That's it.
Oh, I'm sorry, excuse me. It is that time of year where there's always a tickle in the throat, so apologies for that. Well, thank you for those good questions. They were all good and helpful questions, and I hope you found today's webinar helpful.
And we've got some more webinars coming forward for next year.
Yes, so this I think is our final webinar of 2019. If you want to look back at some of the things we've done before, then please do take a look at www.baptist.org.uk/webinars with an S on the end, so webinars, and you can see our library of, I think there's coming up for 8 or 10 webinars that we've run now on various topics, and we have more planned for the new year. If you've got a topic that you think, wow, I really wish they'd talk about this, then please do drop us a line. So supportservices@baptist.org.uk. That's supportservices@baptist.org.uk, and we will look to put something together, whether it be one of the staff team here or a partner organisation who can advise on that topic. We'd be delighted to help you in that way. Thank you very much for your time and have a good day.